Hey guys, it's Whitney here, and today I'm gonna be doing a video really focused on some stocks that I feel like are an incredible buy right now. They are gonna be more dividend-based stocks, and then what we're gonna be looking at are stocks that have fallen in price, even with this recent uptrend over the last week of the market, that I think are incredible buys. Their dividend yield is going up. As a lot of you guys know, or if you're beginners and need to know, when dividend stocks, actually when the price drops, is a great sign for us dividend investors, because as the price goes down, the dividend yield percentage actually goes up. So your passive income that you're getting each month or every quarter, depending on when that company buys or pays out that dividend, ends up going up. So which is an incredible time for us and gets us really excited. So I'm going to be looking at 3 different stocks today. So I'm going to be breaking them down. Found some really cool articles online. So I'm going to be switching over to screen record in just a minute, break that down. So without further ado, let's start breaking those 3 really cool companies down. Okay, guys, so the first company that I want to talk about today is Intel Corporation. So ticker symbol INTC. And this company is a semiconductor company, and it's an American, as you see in this article, IT giant. So this article is currently on Yahoo Finance right now and has some incredible points that I really wanted to start pointing out. So this company has been on a downtrend for sure. I'm actually down in my position and I'm actively buying Intel right now. So shares are down about 34% in year to date. And then even in just the last month has slumped about 6%. So even though in the short term it looks like it is not a great buy, the long-term bullish view is really high. So one of the biggest things is Congress just passed and President Biden is signing in, and it's President Biden's CHIP Act. So what they're trying to do is, as a lot of us know, with everything that's going on in the international world, China in particular, they are trying to bring more production back into the United States. And Intel is going to be a huge manufacturer in subsidized rates. And though it gives the investment tax credit, and $20 billion semiconductor manufacturing plant in Ohio is already under discussion. So that would be huge for us. So we are looking from the long-term strategy of the growth of Intel. This would be a great entry point at its current prices. So it pays a very healthy dividend as well. So it is down right now. They're even at like I said, it's over 34% down. It looks like they've got a lot of people have it as like a $55 price target. Right now, it's around in the $36, $37 range. So you can see that growth potential being there. So it looks to be a great buy right now. And like I said, I am actively buying it for the long-term basis. So this is what I was talking about earlier. When the company's down, then the dividend yield 4% is a very healthy, especially when you have the growth potential. So if you can find a combination of a really healthy dividend yield plus the growth potential of the company itself, that is the sweet point that we are looking for as dividend investors. So okay, so my next one that I wanted to talk about, let me switch over to Kinder Morgan. So this is on the Motley Fool. This is on their free service of it, just their article, so you can find that. But Kinder Morgan is a fuel company, so they're in oil and gas. So mostly in the pipeline stocks. So it has been down pretty about 8. And it's one of those that's in this like $16 range right now, $15, $16 range, and looking to grow from there. What's really cool is that with the recent price decline, the dividend yield, as you can see, is over 6% now. So that's an incredible dividend yield, especially for a company that also has some growth potential as well. So I own Kinder Morgan. I'm actually looking possibly, so I invest weekly $100 at least, so that's an automatic, and then if I get some extra money I put it in. And I usually buy on Mondays. That's when I dollar cost average into it. And I definitely want to buy some Intel, but I'm looking to buy some Kinder Morgan tomorrow. This is being shot on Sunday, tomorrow on Monday when the market opens. So definitely considering that, really leaning towards it. If y'all are interested, I'll leave me a comment. I'll let you know. I'll keep you updated on what I'm buying as things go on. So a lot of what's been happening is there's been some restructuring in Kinder Morgan. They're down, but they had a lot stronger than expected second quarter results, and they have a full year guidance of 5% with growth. So that's awesome. The higher energy prices are also letting Kinder Morgan get into a healthier debt position, and they're adding additional expansion projects. So that's with several natural gas pipeline expansions. So that's what you always want to see with a company that's growing their investment. With the growing cash flow, you always want high cash flow, is that the dividend is going to be safe. So they've been increasing their dividend for the last 5 years, and I think it's going to keep going even higher. So it's a really good watch list, and I think I'm going to pull the trigger and add more to it because I am looking to get some more higher dividend just to increase that income. So it's always good to balance it. You can go back to my video from last week where I broke down my whole position, all the list of my positions with my portfolio. And really for my focus is balancing the higher dividends, but also having the companies that are going to grow too. So I have my staples in there like Johnson and Johnson, like Pfizer, AbbVie, these companies that have been here for years and are going to continue to grow. But then mixing in some JEPI, which is a cover call ETF that JP Morgan does, and I'm actually looking to possibly add a Charles Schwab one as well. So that's always very, very important. So the third company I'm going to talk about is Verizon, and I have been buying Verizon and plan to continue to buy Verizon. I'm down right now, and their shares have slumped 20% from this year's peak. So but like I said, and this is what you'll keep hearing me preach, is that's driven the dividend yield up to 5.7. So that's a really exciting, enticing dividend yield. And I am dollar cost averaging because I am down in my position, which is, like I said, keep saying, you're going to hear me preach it, it's going to get tired, is when that price goes down, that dividend yield goes up. So I'm a dollar cost average in any position I'm down in, especially when I feel comfortable with the long-term outlook of Verizon, which I do. And they're going through a shift right now. With the financial performance, they sold Verizon Media, and they were doing a lot of promotional spending, and then you have inflation on top of it. But it continued to generate a ton of cash. So you've got the $17.7 billion in cash from operating activities just in the first half of 2022. So that is plenty to cover their capital expenditures, their dividend, with some room to spare, like this article is talking about. So they really break down the numbers very well, make me feel more comfortable as an investor. And with everything that's going on, and then they sold their media business, their debt fell to $5 billion. So you always want to see a company that's consolidating their debt, still growing, still have free cash, that the dividend payout's going to be safe. So they're looking at their different growth opportunities for the long term and really setting themselves up for success in the future. So everything is pointing towards that the dividend's going to be safe. That's what we always want as a dividend investor. We don't want to see that dividend get cut. So with all three of these companies, I feel very comfortable to be actively buying them. Always do your own due diligence. Look into the company, see what you're looking at. But with Intel being at a 4%, Kinder Morgan being over a 6%, and then Verizon being right now like a 5.7 dividend yield, those are all four great dividend paying companies. They've got some long-term growth potential, so you get that double whammy of both the growth of the stock, making money on the stock, plus the passive income of that dividend payout. I don't know what else would get you what else you would want from as a dividend investor. So I really hope you enjoyed these three stocks. Okay, so I really hope that you enjoyed the breakdown of those three companies. Like I said, I'm actively buying all three of them right now. Haven't bought Kinder Morgan in a while, so that would be a newer addition to the adding on to it. Like I said, I do have my original position. You can see that over in the full stock portfolio breakdown video. And really just want some feedback, guys. Leave it in the comments if you like these more breakdown of the stocks, if you want more in depth on my current positions. Also looking to see what stocks you guys are buying. So I'm always looking for more stocks to add to my portfolio. One thing I'm looking to do also is, in the last video, I showed like my payout calendar on the dividend tracker, which I love. So looking to add and get it equal. Like I have August is a really high month, and then September is like a medium month, and then October is like a lower month. So I really want to balance it out too. So looking to add companies that have different payout schedules. So I'll do a video on that soon too. If you're interested in that, leave it in the comments. If you got anything out of the video, hit that like button. Always gonna have more content coming out. So definitely hit that subscribe button so you can stay on top of everything. I hope you guys all have a great night, great week, and I'll see you on the next video.